welcome to this video. In the next few minutes, we're going to fundamentally shift how you see the market. We'll explore the mindset that keeps most traders losing and lay out the first foundational steps to move from an uninformed participant to a developing apprentice of price action based on the concepts of ICT. It all starts right now. So here's what we're going to cover. First, we'll break down the two opposing perspectives that really define the market. Then we'll get into what smart money actually is, what you should be focusing on right now, and we'll wrap up with a very specific daily charting practice you can start using immediately. To really understand how the market works, you've got to start by looking at it almost like a crime scene. Seriously. And the first rule of any investigation, you have to understand the victim. This perspective is the key that unlocks everything else. So, who is the victim? It's the uninformed, speculative money. Now, this isn't about a specific person, but it's a mindset. It's a way of viewing the market that almost guarantees you'll end up on the losing side of a trade. Let's take a look at how they think.
This diagram here, this pretty much captures the entire belief system of the uninformed trader. They see price action as a result of what their indicators are telling them. They genuinely believe that when a tool like an RSI is screaming overbought, that the market has to reverse. Their whole philosophy is built on reacting to lagging information.
And here you see the two worlds side by side. It's night and day. The uninformed trader relies on indicators and, often doesn't even believe a smart money entity really exists. Meanwhile, smart money's entire strategy is built on knowing that those traders are out there. And they view their predictable stop orders as a giant pool of liquidity just waiting to be engineered and captured. Okay, so if that's the victim's point of view, what's it look like from the other side? It's time to peek behind the curtain and see the market through the eyes of the entities who are actually driving the price. This one idea. This is the bedrock of the entire ICT methodology. It's a massive paradigm shift. You see, the market isn't some random, chaotic battlefield. It is a highly engineered environment, and price is delivered with precision to benefit one group, and one group only: smart money. So what is this liquidity they're hunting for? It's actually really simple. It's your stop loss. It's the cluster of buy-stop orders resting just above a recent high, and it's the sell-stop orders resting just below a recent low. Smart money knows exactly where we're all taught to place these orders, and they engineer price to go and collect them.
And this is what creates the market efficiency paradigm. The market is perfectly efficient, but only for one side. Smart money has two massive advantages. They know how the uninformed are likely to react to price, and they are the ones delivering that price. It's kind of like playing poker where you can see your opponent's cards, and you're also the dealer.
Okay, so now that you're armed with this new perspective, what are your marching orders? What should you actually be doing right now to build a solid foundation without picking up a bunch of bad habits along the way? First, let's talk about what not to do. You have to resist the urge to forecast where the price is going next. I know it's tempting, but at this stage, it's only going to lead to frustration. You also have to set aside all your old knowledge from other methods. Trying to mix and match things will only confuse you. Think of it this way. You're here to learn a new language. You can't just throw in words from another one. So instead of predicting, your job is to become a master observer, a detective looking for clues right on the chart. And specifically, you're going to start documenting these 5 things. Where did price move away from with real speed? Where are the old highs and lows that haven't been revisited? Can you spot those clean, equal highs or lows where liquidity is probably sitting? And critically, you need to track the high and low of every single day and make a note of the day and time the weekly high and low gets formed. All right, let's get into the nuts and bolts. We're going to turn this theory into a daily, repeatable practice. This is how you methodically build experience. This is where the real work starts. This is the multi-time frame setup you'll be using, and each chart tells a different part of the story. You need a daily chart with about a year of data, that's for the long-term narrative, then a 4-hour chart with 3 months for the intermediate trend, a 1-hour with 3 weeks for context, and finally a 15-minute chart showing just the last few days for that real up-close view. So your process starts right here on a clean daily chart. And don't overthink it. Your only job is to mark the most obvious, significant swing highs and swing lows, the places where price clearly turned around. These are the key structural points
the skeleton of the market. Next, drop down to the 4-hour chart. You're going to carry those same daily levels right over. And immediately, you'll see more detail come into focus. You'll start to see the story within the story, like those big, explosive candles that show you exactly where price moved with real institutional speed. Now, for a really crucial daily exercise. On a separate, clean, 15-minute chart, your only task is to mark yesterday's high and yesterday's low. Then, just extend those lines horizontally across today's trading session. This simple little action is incredibly powerful, and you're about to see why. And this is exactly why we do it. I mean, look at this example. On Wednesday, price rallies just above Tuesday's high, clearly taking out all that buy-side liquidity. Then it immediately reverses and sells off hard. And where does it go? Not to some random level. It aims directly for Tuesday's low to go and take out the sell-side liquidity there. This is the game, right here, in plain sight. The point here is that this isn't some kind of magic trick. This is what professionals do. They keep logs. They journal. They perform structured daily observation. You're not trying to guess what happens next. You are building a mental library of experience, one day at a time, so that these price delivery patterns just become second nature. So I'll just leave you with this question. Are you ready to make that shift? To stop being the uninformed liquidity provider and start becoming a student of how this machine is actually engineered? The goal isn't to guess. It's to finally learn how to see. If you found this valuable, please like this video and subscribe to the channel. If you have any questions, leave them in the comments and a human representative will get back to you. Safe trading.